Hello everyone and welcome to the channel, and let's get right into today's main event. REE Automotive, trading below its cash value. Let's start with a brief introduction. REE Automotive has developed the next generation EV platform, which is completely flat, scalable and modular, providing customers full design freedom to create the broadest range of EV and autonomous vehicles. So the company is touching on a few areas which are expected to grow: electric vehicles, logistics, and robo-taxis. REE Automotive trades on the Nasdaq under the ticker REE, R-E-E. Over the past couple of years, the company's share price has been sliding down to about 30 cents. In October 2023, REE has completed a 1-for-30 reverse split. Even after the reverse split, the shares continued to slide and reached a low of about $2.30 per share around late October 2023. However, since then, the share price has been on a tear, reaching over $7 per share. In early December, the price has stabilized around $5 per share. But here's the kicker. After the reverse split, there are about 10.1 million shares fully diluted. According to Yahoo Finance, the float is only about 8 million shares. Looking at the historical cash balance of the company, we see that the company's cash balance has declined from $275 million at the end of 2021 to $86 million as of the end of September 2023. However, the cash burn rate has slowed down. In recent quarters, the operating loss averaged about $27 million per quarter. But look at this. At the end of September 2023, the cash and short-term investments totaled $86 million. Divide that by the number of shares, which is about 10.1 million, and you get a cash per share value of $8.51. At the time of this recording, the shares are trading at about $4.80. So the shares are trading at a 43% discount to the cash on the balance sheet. Insane. Let's theorize about what can happen at the end of Q4 2023. After the end of the most recent quarter, REE has raised $8 million in the form of a convertible bond. The conversion price is $5.09. So that means 1.571 million shares can be added in the future. In addition, a similar amount of warrants was issued at an exercise price of $4.42. Let's look at the effect of this in estimate number 1. Suppose the company just uses up $28 million of cash to account for the typical quarter burn rate, but add to it the $8 million that they got from the convertible bond. The closing for the $8 million raise should happen in the second week of December. But let's just assume that it happened. Let's suppose the company will use up $28 million of cash to account for the typical quarter burn rate. Let's add to it the $8 million raise by the convertible bond offering. That means the cash per share will be $5.66, implying that the shares are just 15% below the cash value. Let's look at estimate 2. The company currently has a backlog of $43 million. Suppose we take 50% of that and add it to the lower cash balance from estimate 1, plus the $8 million from the convertible bond offering. Then the cash per share will be $6.92, or 30% below the current share price. If the price of the share will spike as it had done recently, reaching over $7, the bondholders can choose to convert the bond, so that will naturally cause the cash per share to decline significantly. In estimates 1 and 2, I'm ignoring the effect of adding the additional shares from the convertible bond. This is because the current share price is below the conversion price of $5.09. Estimate 1 and 2 do, however, take into account that the warrants are going to be exercised. REE also mentioned that it might need to raise additional $20 million to meet its 2024 goals. That will further cause the cash balance per share value to decline. However, all else equal, as noted earlier, the shares are trading below the cash value per share right now. Looking at analyst estimates, we see that 4 analysts currently have a price target of $5.17 per share. Most of these estimates are pretty recent. Looking at some company fundamental reports, we see that this report gives an overall ranking of just 1. This means that the company fundamentals are very weak, especially given the fact that the revenues are very minimal or non-existent at this time. However, this Morningstar valuation report gives the share price a target of over $11. Keep in mind that although REE recently consolidated its share count, it can always do another share offering, which will increase the share count and hence decrease the cash value per share. Based on current cash balances and fully diluted shares right now, the shares are trading below their cash value. The 8 million float can imply that the company's share can spike on good news. In the long term, the convertible bond will cause the cash per share valuation metrics to decrease. So there you have it, folks, a closer look at REE Automotive's cash per share situation right now. Remember, this is not financial advice. Always consult an expert who knows your situation and never risk more than you are willing to lose. Thanks for watching. If you liked this video, please ensure to hit the like and subscribe buttons to help the channel grow. Thank you so much and have a profitable day.